Okay, we're live.
Yay!
We're live, everybody. How y'all doing?
Hi, Chi Chi fam.
Yeah, we've been having a lot of difficulties with the streaming software, so that's why we're a little behind, but better late than never, right?
Mm.
So let me just open something up real quick, give some people time to come in. How you doing today, though, Lisa?
I mean, you're talking about across the board, but I've had two crazy deals that I had to be lender save a deal on, and
That's why we're a
unfortunately, it
little
just didn't go
behind.
through. And it was just failure of due diligence from the previous lender, and it got shoved over to my side. And when I looked
Yeah.
at it, it was just really, really unfortunate. So borrower did have to lose certain dollars and everything like that.
No, same here.
It was
Um,
a really sad situation.
I know. So today we had to cancel one of our deals on one of my buyers because um the seller was just being too greedy. Seller wanted us to come out of pocket 50K, and I was just telling my buyers it's not worth 50K more. It didn't appraise. We were willing to offer them 20K outside of appraisal to where the total was still net 420, but 50K, that's not cutting it. And then the seller was trying to get my buyers to switch lenders, which my buyers don't want to do. And even if we switch lenders, if the appraisal didn't come back at the price they wanted, they were going to cancel anyway. So it was like a 50-50 gamble, and I didn't want my buyers to pay for another reinspection and still not get 100% guarantee that the seller's willing to even reduce the price. You know what I mean?
Oh yeah, and these are the people who already lost the last buyers. So then your buyers jumped in. This is the one that you're talking about last week, right, Chia?
Yeah, yeah.
It's
This
just
a
so crazy.
This is the one where we went live a couple weeks ago, and I showed you everybody the text from the agent that I'll offer. If the offer is it still good? Does the buyer still want to proceed? And so yeah, it was that buyer.
That's just crazy. It's a really crazy market. I mean, I really love how you always go to bat with your people, or our people, really, Chia.
Our
It's
people.
just amazing that you do that, and that's the thing for you guys out there. Regardless of who you're choosing, make sure that you are choosing somebody that has the courage to stand up for you when something is not right. I've seen it time and time again, and in fact, I've actually almost had to go to court because of an agent doing something that he wasn't supposed to be doing. One of my clients just happened to walk into an open house, got sold. The agent said, well, if you go with me, you get the house and everything like that. And it ended up to
Yeah,
be a nightmare deal for them.
shady
And it's
stuff.
just really, really, really unfortunate. There's a lot of advantageous people out there. I wish that there wasn't, especially in our profession, when we all take the same license and all the same ethics class to help those out there who don't know any better. But unfortunately, not everybody heeds by that rule. And you want somebody that's not afraid, not just to stand up for you, but to fight that fight for you, and to also be willing to put those strategies in place. Chia, you just
Yeah,
made a video how you just got your buyers $45,000. Let me tell you guys this.
yeah.
That's very, very super rare in this market. And I love working with Chia for the sheer fact that I know that when he goes out there, I can send my brothers, I can send my family to him and know that he's going to take care of them in that way. And if, just like the situation right now, if the seller's going to be greedy, he's not going to take a look at his pocketbook like, unfortunately, a lot of agents will. He's going to take a look at your livelihood and make sure that you get the best situation possible.
I know it was so unfortunate for my buyers because they've been looking for months, just like every
Yeah.
other buyer out there, right?
Yep.
And when they heard the news a couple weeks ago that our offer was gonna get accepted, they were super excited. And going through all of this, they pay for the inspections, they pay for the appraisal, and for them to have to cancel today, it's so devastating because they've been invested physically and like emotionally into this transaction already. They were like, they were like super excited for,
Oh,
but
yeah.
yeah. Oh, we got a
Well,
question in.
yeah, sure.
It's from Tam. If you offer all cash for the house, should you still do the appraisal? That's even if you do the appraisal, Tam. Um, I'll share my point, and Elisa can share hers. What she thinks about this question. Even if you offer all cash, it's really up to the buyers if they want to still move forward with hiring an appraisal to make sure you bought it over price or not. I think that's really for knowledge base, but in this market, it's not gonna do you any good at standing out as a buyer, even if you're doing all cash and you still want to do the appraisal. Like a seller is just gonna look at that and be like, you submitted an all cash offer. Why do you want to do an appraisal? I mean, even if you do it, I'm not going to reduce the price. What do you think, Lisa?
So I'm more conservative, and I'll say if you're going to go ahead and buy a house, you want to check under the hood of it. And the appraisal is kind of like that. Okay, it'll tell you if you're really truly buying a Mercedes or you're buying a. So
Yeah.
in my opinion, even if you don't need to do inspections, and even when you're doing a loan, you don't always need to do that. I would always recommend it because a few $100s may save you a few $100,000 down the line. And she is very, very right about that. If you're offering a cash offer and saying, "Hey, we can close in a week or 2 weeks," or whatever the case may be, still it is to your benefit for to have these values come in for you, especially if you're flipping, if you're doing any of that type. I would recommend it.
And another thing you got to understand too, Tam, hopefully we answer your question, by the way, is that hopefully you understand, Tam, that because you're doing a all cash offer, you know, you have to understand that the seller is probably choosing your offer because you're all cash and because you're going to be able to close within a week or so. Right now, me and Lisa just had this issue today. One of our deals right now, appraisals is backed up to almost a month, right, Lisa? Almost a
Yeah.
month. And we've been in contract for like what, a week now? And to be like a month out on a appraisal inspection only. That's crazy. So like a seller's gonna look at that, Tam, and say, you know what? I chose you because you could close fast, because you're cash, and because I was hoping there wasn't gonna be any appraisal contingencies. But hey, if you want to do an appraisal, up to you. But make sure it's done within a week or so. And even if you were relying on that appraisal to not make a purchase that's over, make sure you have that appraisal contingency still in place. Because if you don't have it, you can't exercise that appraisal contingency right and get your deposit back. So
Yeah, you make an yeah
remember
you make
that.
an You make an excellent point, Chia. I'll circle back on that a little bit later. And Tam, when you are purchasing it all cash, you can get your own appraiser. You do not have to go through the appraisal management team or anything like that. That appraisal just is for your benefit. And if you already saw the house and you have the experience in buying houses and you feel like, you know what, I already know, I already see everything. I think I pretty much like it. Go ahead and purchase. That's totally fine. That you can absolutely do that. Again, I veer towards the conservative side. I like all my assets to be a little bit more protected. It makes me feel a little bit more buying the house, even though I'm buying it with all cash, because your cash can do a lot of things, not just buy this one house. And I want to make sure that one, if you are using all cash now just to win the offer, so that later on you can refinance and take some of that cash out, you want to make sure that your house is valued for what you're buying it for, so that you can maximize the cash. Okay.
Correct? All right, Chichi fans, it looks like there's a few of you guys on right now. So let me just first start off by saying thank you guys for taking the time to join me and Lisa for our live stream today. We're going to talk about loans. We're going to talk about a few other things that popped up. But before we get to all those topics, let me just do like a quick market update for you guys to let you guys know how many homes for sale, how many homes sold in the three counties here, Sac, Eldorado, and Placer. Okay, so let me just go ahead and share my screen real quick. Thank you again, Tam, for the questions. If you guys have more questions for me and Lisa, make sure you guys jot them down in the live chat. And while you're down there, like the video. It helps. All right, let me just go do a quick search. Click this here. Let me just zoom in so that way you guys can see everything more. So let's go here. So I always put 3-bedroom, 2-bath, 2-car garage. Oops. Because those are the pretty norm, the median sized homes that people are buying right now. So if it's anything below that or outside that parameter, it's not going to show up in this data. Okay, it needs to be minimum 3-bedroom, 2-bath. Okay, let's see how many homes. There's 1,200 homes right now for sale, still available in 3 counties. Let's go to sold. How many homes sold this past week? May, June. $368 homes sold this past week. Okay. I'm curious, how many homes sold last week? I don't think I did that for you guys last week. Let me just go real quick. $400. So on average, like 300 to 400 homes selling every week. About 100 homes right now, 1,000 homes right now in these 3 counties. Man, the market demand is still up there.
Yeah. Well, Chia, do you have a number of how many people are actually wanting to buy or how many residents that live in Sacramento? I'm sure that percentage is going to be a huge variance, and this is the reason why supply is still much, much lower than the demand.
For sure, like let me look real quick. Just look real quick. What do you guys got going on this weekend? Lisa?
Oh, we're going back home to San Jose. We're going back home to San Jose for my mother-in-law's 75th
really?
birthday.
Yeah? Oh, man. That's gonna be fun. No, it's gonna be fun. It's gonna be
Yeah,
fun.
I'm just kidding. It's always fun when we go back to the Bay Area. It's our stomping ground. That's where we lived for 27 years before we moved up here.
Yeah. Do you miss going living in the Bay?
Oh, it's absolutely different. I mean, I moved up here in 2005, and let me tell you, Tia, it took me 7 years to finally not hate it. And when I say not hate it, it's not because I don't like the city or anything. I didn't realize how much I love Asian food until I moved up here, especially Vietnamese food, because I had it growing up. So I took it for granted. And it took a while for Elk Grove and Sacramento to actually grow all of that. In the last 15 years, so much has happened. So that's why it's attracting so much more Bay Area people to come on up.
Yeah.
Now I love it. I don't see myself going back. I love San Jose. It's always going to have my heart. But with the prices and just the way that everybody is, it's a real rat race over there. Everybody's running that hamster wheel. Everybody's just trying to make it. Everybody's just trying to get by. And those who have bought homes earlier, like my parents, they're very, very fortunate to capitalize on that. There's a lot of money in Silicon Valley, but there's also a lot of greed, and there's also a lot of shadiness too because of it.
Money makes people do stupid things, for sure.
They do. It does. Sometimes it's unfortunate, but it does.
Yeah. Tam has a question again. Should I
Yeah.
trust my agent's comp or should I use PropStream to do my own comp? I'm a first time home buyer in SoCal. Big fan of Chia. Thank you. Learned a lot from your vlogs. Thank you, Tam. If you don't trust your agent, oh man, that's already a
The
sign
red
right there.
flag.
I think you need to find another agent that you trust. Normally, I always like to say your agent should have your best interest, but if you feel that way about your agent, Tam, man, I think it's best you interview another agent or at least let your agent currently know how you feel and see what they say. Like I always tell my clients to give me feedback. If there's any time you feel uncomfortable about some of my suggestions or recommendations, let me know because I'm human and I don't have a crystal ball and I cannot read your mind. So, like, give me constructive criticism because it makes me a better agent for future clients. So
Oh
I
yeah.
tell my clients that all the time and I still tell my clients that all the time because I understand that this is your livelihood. Buying a big investment like this, a home, it's not like buying a shoe. So like it's a lot of money invested into it. So I always try to be upfront. Humility is a big thing. I try to be very transparent, and I walk anybody through the process of buying or selling as if I'm walking my mom and dad through the process of buying and selling.
Yeah.
So if they don't trust me, I'll tell them straight up. I don't think this is gonna work out then because you and me don't have that trust. We're always gonna butt heads, and it's not worth it for you because it's gonna ruin your experience of buying, and it's gonna make me feel like I can't sleep at night, and I don't think that's worth it. So you need to ask
Oh
yourself
yeah.
that question. If you don't trust your agent, you might want to start interviewing other agents. Find someone that you do trust. That's so important. How do you feel about that, Lisa?
So, in my opinion, I was like, that's the first red flag that I heard you saying. I was like, should I do my own comps? It's like, well, if you're hiring somebody to do that for
Yeah.
you, you really shouldn't have to, should you? As an investor myself, I always do, just again because just that's who I am, you know. But if you don't feel like you can trust that person, ask yourself certain questions when you're interviewing your realtor. Ask them, okay, if we're up against this situation, how would you fight for that? If we up to this situation, how would you fight for that? Ask those questions that you hear Chia and I talk about and see how they respond to that. And when you interview people, if they're speaking to it with ease and with passion, and they're speaking your language and helping you understand what it is that you truly want and you're and match, if not, you just
Uh-oh, I'm
and
losing you.
it's not your agent though. Okay.
I lost you a little bit right there. What did you say? In the last couple of seconds.
Oh, I'm sorry. Where did you lose me?
I It just went staticky. Hopefully they heard it because I didn't hear it.
Oh,
It was staticky, but
oh, okay.
but
Well, I was just saying when you interview your agent, when you interview your agent and when you interview your loan officer, ask them these key things. Whatever it is that you're watching online and the questions that you have, if they're answering with ease, first of all, you have to feel like you can ask them things, that they're not brushing you off or they're not feeling like, hey, you know what? They're not rushing you or
yeah,
anything like that. And they give you that time that they allot you with. That's a great sign they really want to help you. And sometimes the loan agent or the real estate agent may not be a bad agent. They just don't understand what it is that you want, and if that's not a connection, they may look great on paper but they might not be the best for you.
yep. I always tell people that interview me, Mr. and Mrs. Client, this is what I always tell the clients that interview me for the job. I could sugarcoat myself and make myself look like a superhero in front of you, but actions speak louder. I think it'll show you more value of how I work and operate when you're in the field with me. So that's what I normally tell all my clients. So I'd probably recommend you do the same, Tam. What are you doing over there, Lisa?
Oh, it's my son, he walked in.
Oh, okay, got it. I'm like, huh, what's going on? What's all that noise? Okay. All right, so oh, Tam says Elk Grove versus Garden Grove for Vietnamese
Mm.
family.
I mean, oh,
I'm losing you again, Lisa. Something's going on with your internet connection again.
I'm so sorry. It's just this area, and it's this
I'm
time.
telling you, you need to go and swap
I'm
it
hoping the
with.
audience can hear me
I didn't hear you. I hope they did. But okay, so why don't we talk about today's
right
topic real
now.
quick about the uh
Sure.
how much money a buyer should put down for a home purchase, whether it's 3%, five
Okay.
percent, 10%, twenty
So there's a
percent.
couple. Okay. So there's a couple of things that we're going to talk about today. One, um, the reason why interest rates rise and slow down and things like that is based on really truly the market. Inflation does take a huge role. Whatever's happening in the economy takes a huge toll. And during this week, it actually started to go down a little bit. Okay, so whether or not it goes up or down, nobody knows. However, you got to take a real look at your numbers to see, hey, does this still make sense for me? And if the interest rates go up a quarter of a point, is it still affordable for me? That's really what's important. The interest rates really don't make you the money. It's how you play the game. It's how you monitor your finances. It's how you make sure that you're cushioning yourself so that you know that, okay, if it reaches to this point, I may want to reconsider or lower my price point. I also want to talk about the different loans that are out there. So there's several loans, and two, the CAT, QM and non-QM. QM meaning qualified mortgage. Non-QM is non-qualified mortgage. So what does that really truly mean? So a qualified mortgage is one that follows the regular guidelines, the traditional way, your bank statements, your pay stubs, all of that look normal. Okay. Where is people who self-employed, who don't they make a lot of money. They have a lot of deductions as well. So on paper, it didn't look like they have a lot of income. Totally fine. So they could use those types of loans. So loans that are above the county limit is also considered a. So there's other criteria that are needed if you're not a resident here in the United States. That's a foreign loan. Um, there are loans such as that, and there's a whole bunch of other ones. If you feel like you don't know which category you're in because there's so many, definitely reach out to a loan officer to see what the pieces of your puzzle look like, and if they're willing to help you out with that, or if not, you can shoot me an email and I'm more than happy to price out all the options that are relevant to you. Now, Chia, you talked about what's good, what should you put down, 3%, 5%, 10%,
Yeah,
15%
yeah,
sense
yeah,
for you.
yeah.
Now, there's not a one size fit all. Okay, everybody's situation is very, very different. And whether or not you put an amount down, your monthly payment is going to be higher. Okay. But on the other hand, if you're a first time buyer, I wouldn't recommend for you to put all of your eggs in one basket because you never know what's going to happen. Okay. Life throws you a curveball and now you have all your money in your house. Putting money into a house is easy. Taking it out as a situation, your future needs, and when you're looking at your finances, you want to work with somebody that's willing to not look at just this one-time transaction, but look at what your life events are coming to in 5 years. Or you have a do you have a, how much uh, that and so see if I can have your permission to share my screen so that I can show the
Yep, go
numbers
for it.
today. All right,
Your
let me
internet
that and
is
see that
really cutting
clearly,
back
or do
out.
I need to? Oh, I'm so sorry, guys. I am looking into it. Hang in there with me. But from what I understand, Comcast is the only one that exists in my neighborhood.
I can see your screen.
Chia, is that big enough for everybody to see?
I'm not seeing it pop up over here, so hold on, let me just do something real quick, okay?
Okay. Everybody for being so patient.
Okay, I see it now.
Okay, great. Is that big enough?
You might want to zoom in a little bit more.
Okay. How's that? Ooh. How's that?
Okay, that's good.
Okay. Let me make this screen a little bit bigger. I'm going to move my camera a little bit here. Okay. All right. So there's much more options, but I'm just going to give you the basic ones that typically are used for first-time home buyers. Okay. Okay. So this is based on a buyer who has no debt with a credit score of 760 and above. Okay. The way that the banks qualify you is based on your income, your assets, and your credit. So whatever that combination is determines what type of program and how much down you need to put in and how much buying power that you have. Okay. So when we're talking about debt to income ratio, your debt, you'll see this right here, okay, on each program that I have. The first number is the debt to income ratio based on whatever the mortgage is going to be per month versus how much your income is going to be. The bottom number is based on the debt that you're going to have on the new home and all your other debts such as cars, credit cards, things like that. So FHA loans are a lot more lenient than any of the other programs. It will allow you to go up to 57% debt to income ratio. Okay, so we'll talk about the FHA first. FHA loans, you only have to put a minimum of 3.5% down. Your household income based on this, okay, only needs to be $93,000. Although that may seem like a large number, the average household income for Sacramento right now is about $100,000 already anyway. That's about $22.50 per person in the household, okay? Making a
What's
little
that
less than
block?
$47,000 a year. I'm sorry?
Something
Oh,
just
I'm sorry.
popped up.
I put on
Yeah.
another screen. Sorry about that, guys.
Yeah, go back to the Excel sheet.
Okay. Let me know if you guys see that yet.
Got it. It's clear now.
Okay. Awesome. Awesome. So you also have to look at what the county loan limits are, okay? The county loan limit, okay, in Sacramento County is $598. Now, FHA will allow you to go a little bit higher only because the mortgage insurance premium, you have to pay that up front. So that's the reason why you're seeing that it's a little bit higher here. But really, technically, the base loan amount is actually only $598. If you're doing this with this credit score, the current interest rate right now is roughly about 2.625. Your mortgage, your property tax, all of that per month is a little of 600. I'm going to go a little bit slower this time. So Chia, you're going to you got all of that information, so I know that the audience got all that information too.
Yeah, it's pretty clear. I can see it here.
Okay, perfect, perfect. So the second option, okay, is for a 3% down, and I apologize, this is actually supposed to be 45% over 40. Okay. So the 3% option, actually, let me go back a little bit. The FHA option does not require for you to be a first-time buyer. It just requires that you have to live in this property as your primary residence, okay? So if you just sold your property, you're okay. You can go back to go to the FHA if this one best fits your financial needs. For a conventional 3% down, you have to be a first-time buyer. You do have to take a first-time home buyer course, okay? And the maximum loan amount is going to be $548. That's allowed for a 3% down. So based on that, If your household income is 90,000, your debt to income ratio is less than 45%, then you'll be able to qualify. Now, because you are putting less down, okay, typically conventional loans, the interest rates are going to be higher than FHA loans, and that's just the way that it is, okay? Typically, because the mortgage is for the life of the loan, if you refinancing, uh, the interest rate lower. The more you put down, the better your interest rate is going to be, okay? Now with the 3% down, on average, the interest rate is 3.125 per monthly mortgage and property tax, interest rate, mortgage insurance, everything is about 32.14. Okay,
Got it.
we're good. Okay. One, if you are putting at least 5% down, the income ratio allotment can go all the way up to 50%. Okay, so if you're doing this, the rate currently right now is standing at 3%. Anything above 5% is standing roughly about 3%. Now, it is going to be a little bit higher. These numbers are a little bit higher because anything above 524 is considered a high balance loan. And high balance loans, the higher the loan amount, the more risk that the banks are taking to lend the money out, so the interest rate is a little bit higher. If your loan amount is below 524, the interest rate right now stands at 2.875. Okay, guys? I'm just pricing this out for you so that you can see what the maximum is that you need. So let's go back to the 5%. You're moving to the $500. Okay?
A lot of them are Lisa.
Mhm.
A lot of them are the Chichi fams are saying that you're breaking up really bad. The audio is very bad.
Oh, I'm so sorry, Chi Chi fam. Do you want
Maybe
me to log off and log it on?
no, don't do that. Hmm, hmm, hmm. Just keep trying to do what you're doing, but then if you break up, I'm just gonna call you out so you can repeat for the past 5 seconds.
Okay, so I'm gonna go over that 5% again, okay? Because I'm cutting out, I'm gonna go over that 5% again. If you're putting a minimum of 5% down, your debt to income ratio allotment is 50%, which means your income doesn't have to be as high, okay? Your household income only needs to be 84,000 to qualify for this. The interest rate right now is roughly about 3%, and it is a little bit higher than the regular loan because anything above 524,000 is considered a high balance loan. So the higher the loan amount is, the more risk the bank is taking in order to give out that loan to a person. So therefore they'll charge a little bit more. The interest rate for anything below that 524 mark is 2.875. So it's not a huge difference. Okay. Your monthly payment is going to be roughly $34.50. Did everybody hear me on that one?
Yep, that was clear.
Awesome. Okay. So same thing with the 10% down. You're able to go a little bit higher. The loan amount, the purchase price now is 664. And I apologize, I actually forgot to talk about the purchase price. Silly me. So for FHA, your maximum purchase price in
Hold
this
on,
scenario is
you're
going to be
breaking up again.
maybe now.
No.
Hold on.
Maybe next time you're gonna
Sorry,
have to come to my house.
fans. Yeah, I think so. And
Yeah,
you
you're breaking up really
know,
bad.
day.
I can't hear you at all.
I am so sorry. Man. Let me know when you guys can hear me again.
Okay, I can hear you now.
Anything?
Yeah, I can
Anything?
hear you now.
Anything?
You're good.
Okay, great. So I'm going to go ahead and talk about purchase price, okay, Chi fam? So for FHA, in this situation, the maximum purchasing price is 619. For 3% down, the maximum purchase price is 564,900. For 5% down, you're looking a little shy of 630,000. Did you get all of that, Chi fam?
Yep.
Perfect. Okay, now we're going to 10%. So 10%, you can actually go all the way up to 664,400. If you're doing 15% down, you can go up to 703,500. And if you're putting 20% down, you can go up to 747. Again, If homes higher than that, then you go into the loan range. Anything above 598 in Sacramento County and Placer County is considered jumbo rate. We'll talk about that some other time unless you guys want to know a little bit more about that. The interest rate is going to be higher. Right now it's about 3.5%. In this area, it doesn't happen very often, but there are brand new builds that are starting out and selling out in Elk Grove for 800,000 right now, guys. So it does come with a different set of criteria. Okay, so you'll see the payments are roughly very similar down, the less your payments are going to be. If I scroll down a little more here, I'll list out roughly all of the closing costs. These numbers right here that I'm circling are the estimated closing costs. Now, I typically will disclose this on the high side because one of the ways that we're trying to be aggressive with your offers and making sure that you have a chance to win the offer also is to say, hey, Mr. Seller, I know you got 20 other people that love your property, but I love your property so much that I'm willing to pay for my closing cost and your closing costs too. And a lot of times you guys paying an additional closing cost for the seller saves you guys probably about another $10,000-$20,000 instead of having to bid a lot higher, okay? And then risk the chance that the appraisal might not come in at value, and then we have another set of issues that we have to go through. If you're doing the FHA loan, you're going to need roughly about $33,000. If you're putting 3% down, you're needing a little shy of $28,000. If you're doing 5% down, you're going to need roughly about $43,000. If you're doing 10% down, it's going to be roughly about $78,000. If you're doing 15% down, you're going to need $118,000. And lastly, if you're doing 20% down, you're going to need roughly a little shy of $162,000. And again, this is different just because the purchase price is higher. Okay, you do not have to go this high. This is just the amount that is the maximum for Sacramento and Placer County. Okay,
Got it.
I hope all that information was
There was
you're able to hear that,
there
Chichi
was a
fam.
lot. There was some breaking points every here and there. I'm just looking at the chat right now, and there are a few people that noticed that there was a lot of breaking up. But this is what I would recommend all of you guys, Chichi fams. If you guys have a scenario like a loan scenario, a really good app to have is a amortization app, a calculator. It'll show you guys all these numbers that Lisa are telling you guys about or showing you guys right here. Um, that's a really good app, and I always tell my clients to get that because when you're out there making offers on homes, right, you want to know how much your down payments are gonna be, and you also want to know, like um what your closing cost is and all of that. If and so depending on if the home has Melrose or not, that's also gonna affect your your